Okay, welcome everyone. Good morning. Happy Thursday. We're back on our daily SPX plan with Doc. Welcome, Doc.
Good morning, everybody, and welcome. Thanks. And I'll just take it away. And you guys read the disclaimer, so none of this is investment advice. It's for educational purposes only. So if I hypothetically mention trade ideas, it's just sort of to illustrate a point. Okay. That said, and if you look in the comments section, I have my daily plan, which I post on X. I post it in different places. I posted in the MentoQ Discord and in one of the channels that I have, where I kind of sometimes go into more details about some of the items. Okay, so that said, so for today, first let's just look at the. We have some economic indicators this morning. We have jobless claims. We have Philadelphia Fed manufacturing. We have different Fed people speaking throughout the day. And I say all that to say this, that we're going to likely have some wiggles based on these numbers. It's not really my skill set to try to interpret what the numbers mean. I know what I think they mean, but what I think doesn't really matter. What matters, in my opinion, is what the algos think. And so the algos will do what they do, but I'm expecting wiggles, no real big smoking guns. And so, that's a way of saying don't get shaken out of a trade if you see, a reaction. Look at it as an opportunity, possibly. Okay, that's it. So let's put it into context. So yesterday we had VIX expiration, and the official VIX settlement was 1594. And so now let's take a quick look at VIX. And let me change the time frame. Let me bring it down a little bit so we can just kind of take a quick look at what's going on in VIX. And as you can see, yesterday, the settlement was pretty much the VIX high of the day. We stayed over there. And then VIX just kind of rolled lower throughout the day. So we're kind of having this 15-ish VIX floor. Now VIX is kind of heading back up. So now let's remember that VIX roughly is 30 days. So what we're looking at is the volatility priced into the March options expiration in the SPX. And so we'll talk about possible VIX ideas later. We know VIX is a mean reverting asset. And so I'm going to talk a little bit about the potential unclench. And so with the VIX expiration, the range of VIX got tighter and tighter as we were approaching the expiration. There are a lot of calls and puts around 16, 15, 17. And as we came toward expiration, VIX kind of got tighter and tighter, bound by that. VVIX, the volatility of VIX, went lower and lower. Demand for VIX calls was low. People were buying VIX puts near the money. And so I expect, don't know, that this tendency will reverse. And with that, VIX should, quote unquote, get back up to a 16-ish level and above, a more normal VIX level, with whatever spillover effect that has into the indices. Now we're talking next week into March. We know March is historically a weak month. If we go back in history, we had a great history lesson during the pandemic when we all knew about the pandemic. Just repeating something most people are aware of. We all knew about the pandemic in December, January, February, and the market went to new all-time highs. February options expiration came. we had a 30% correction, and March OPEX came and went, and the correction was over. The bear market was over, and the structural effects took over. I'm not predicting that. I'm just saying the Fed to March is historically that kind of structure, for whatever reason. Is it this month? I'm not sure. I haven't looked that closely at the March expiration yet. I plan to over the weekend. Just kind of mentioning the possible unclench. But now let's get back to the present moment. For now, for today, we have the AM expiration tomorrow. So the last trading day is today. And we've got some just pretty well-defined big levels that we've been grinding within for the last few days. We have 61, we have below the 6,100 level and near the 6,100, 6,105. I kind of defined my top zone as 6,110, just with the idea that if 6,110 breaks, we're heading toward the 6,105, which if you're a bull, you don't want to see it break, but really, you know, worst case scenario, I think we end up down here, we mean reverse back up above 6,100. I think we kind of stay in the zone we've been in. We undercut 6,100 on Tuesday for a second and quickly went back above it. Does that mean that, is that a guarantee? No, of course not. To the top side, we have, also at 6,100, we have what looks to me like a put spread structure. It looks like there's 61, there's 20 wide, looks like 6,100 puts. I'm going to guess are short, 60, 80 puts that are long. I'm not going to bother pulling up the chain. You can check yourself. And so that's just adding support to that area. Of course, if that breaks, then the longs kind of become a magnet, but I don't see that happening. To the top side, there's kind of mixed options, mixed calls up in this zone, kind of smallish, you know, maybe 1,900, 1,200 up in this range. And we have our big level here, the 6145, 6150 round number that we kind of has been a magnet and a resistance at the same time. And I kind of expect the same thing today. If we can get over this level, then the 6570, and then as we get up here, there's lots and lots of volume up there that's, you know, likely calls sold all the way up in here, institutions selling premium, and so we stall as we get up in this direction. And now it's the AM expiry, and if you just look in the AM chain, those are also decaying and they're larger volume, and market makers have to hedge that out, and they're larger volume, larger open interest, larger gamma than than what's expiring today in most cases, or in many cases, and they just add strength to the same levels. 60, 90, 6100, 6150. I listed the levels in my daily note. I'm not gonna bother pulling it up and go over that. You can read it. I put it in the comments. But it's broadly the same levels where we are right now, other than nuances. Also worth noting is that Friday is the options expiration for individual names. So wherever those individual names are with respect to their major levels, there's going to be hedging impact that's going to spill over into the indices. Now, I don't know what's going to happen. Your crystal ball is as good as mine. But let's just take Apple as an example. The holders of the calls somewhere near here Are they going to sell them and roll them out? If they sell them, then we go down. Are people going to opportunistically buy 247.50s for tomorrow for whatever they are, 68 cents, or I'm just making up a number, and there'd be enough volume, fancy algos weaponizing gamma to make numbers go up? I'm not sure. The point is that these factors also play in. I like to watch volume of these kind of names, especially going into options expiration today and even more so tomorrow. So I'm going to do a quick around the horn at the big names. Apple, as we can see, kind of right near that major call resistance level. Let me just kind of change the time frame a little bit to get a little context. And it's kind of been tickling this level up here, the 60, 50, 60, these round numbers tend to be sticky. And, my default is that Apple is kind of going to be stalling. I'll come back around to some of the other names of interest in a minute. Amazon is kind of near this supportage level. So what I ask myself is, the holders of the puts at 220, 225. If those people are green, or even if they're not, if they're profitable, are they going to hold them into tomorrow? Are they going to monetize them? If so, when? When they get monetized, does that create a release of hedges against these positions? What about the calls? Are these the 225 calls at the money? Are people going to hold them, sell them, roll them? So my default would be that Amazon likely sees some relief. And I'm just kind of, thinking out loud on these. I didn't really prepare anything, Google, we know, got beat up after earnings. It's been holding on to this 180 area. So here's a good example. Once these clear out and people monetize these puts, assuming if you're long the 185 put or the 187.5 and in the money put, that you don't want to accept assignment of X hundred or X thousand short shares of Google. These are going to clear out, and then we get to see what the real sentiment is going into March. So Google could unclench from this area and have room to breathe and go up. Could. I'm not saying it will, saying could. Let me look at my Mag 7 dashboard. Microsoft. Microsoft finally began to unclench yesterday. I don't know what the news catalyst was. And this is looking to me like it's got room to head through these calls. I don't know how far it gets into Friday, but this is just another example. We have these, I'm not sure what the open interest is. What I would do is check put and call open interest, and we'll look at the Mental Q dashboard website in a minute. And we'll kind of come back and do some of this analysis real quick on some individual names to just kind of show you the way I think about things. There's other ways to think about things. But since it's my show, that's what you can listen to. Microsoft, okay, now, of course, the mother of all things good is NVIDIA right now. And NVIDIA at that 140 inflection point, which we've kind of been able to get over and stall out. Now, NVIDIA has earnings next week. I'm not sure what day of the week that is, the 26th. I think it's the 26th after the bell. So I guess that's maybe Thursday. the day before options expiration, Wednesday or Thursday. So that's why in my mental note, I have, if we don't have an unclench or weakness or changing of the guard or changing of tone on Friday or Monday, Tuesday, next week, with the monthly options expiration, with the NVIDIA inflection point, then the window of non-strength or the unclenching to go higher or whatever is going to be, I think that opens up. I think we get a volatility reset possibly into that. So that's going to sort of keep your eye on NVIDIA in case that might have escaped your notice, says I semi-facetiously. But I think it becomes a bigger deal than, it's always a big deal, but where it's positioned in terms of the option cycle just kind of might push out that range a little bit. The other thing that I think is worth noting is that there's a lot of structured products and ETFs and VDY, or I don't even know which they are, that sell, they basically buy the underlying or buy fancy long-term options or whatever they do and sell at the money calls or whatever that formula is in these on a weekly or monthly basis. And so there's a lot of these 140 calls that have been sold. So that kind of keeps the volatility dampened. But of course, with earnings coming up, if this goes through, we can easily, like we tend to do on earnings, overshoot new all-time high in NVIDIA. Things get crazy on Wednesday, Thursday, Friday, and then we see where we reset. Or we can just like stall out, depending where we are. 140 is going to be difficult to get through, in my opinion, before that. Meta. Now, I saw anecdotal news, I don't know if it's true, that part of what happened with Meta, and we had 20 days in a row, whatever it was, of Meta making history, quote unquote, just going grinding up and up and up since earnings, wherever the earnings was, since earnings over here. And what I read anecdotally was that some big players sold calls. They sold at the money or in the money calls to kind of lock in their gains. And I don't know if that's what happened, but that's what I heard, read in various places, various research notes, whatever. And so now we're at that 700 inflection point, nice round number. Again, we'll look in the chain and we'll see if people owned in the money puts for February, they're probably gonna close them out, and we're gonna see what clears out in the puts and calls if see if Meta gets unpinned. Microsoft reveals. Right, yeah, I saw that story. Yeah, that was the catalyst. The Madrona quantum chip, which will be operational in 50 years. No, maybe only in 10 or 20, if quantum computing actually becomes a thing. But it's a narrative du jour, and so until it doesn't move markets, then it matters. I've got some shares in some of these crazy quantum names. They're up ridiculous amounts. Well, a lot of these quantum names, I'm going to digress and editorialize for a minute. A lot of these quantum names, I'm not going to bother to pull them up on the chart, are kind of like the new version of GameStop or AMC or whatever it is, the gamma names. A lot of people on FinTwit and Reddit and wherever, me included. Not that I get them from there, but a lot of people, me included, as well as those people, are trading those names. A lot of options volume is coming in, people are buying and selling calls, and the float is relatively thin, and so they're very susceptible to call buying, and you get these crazy 5-10 point swings. And the quantum names are fun to trade. I trade them small. I'm not going to put my retirement account in it. Okay, I'm done editorializing. Okay, QQQ. Getting back to this 550 has been the tight level. QQQ has failed to make a new all-time high, I believe, while SPX has. Not that it's failed by much. It's pretty close to it. I guess it made its all-time high a little while ago. Looks like from the chart. And so, is there a catch-up trade here in Qs? I think most of the indices look like they're at their destination. They look like they're at their destination. Now going back to the top tickers, MentorQ has a little screen they call Top Tick, which gives the indices, QQQ, SPX, and among the top tick we have IWM, which has been like waiting for Godot. IWM has just been kind of in this range. 226 has kind of been the number. I don't remember where the MAs are. Moving averages 222, and we kind of undercut once in a while when the market is depressed, and we kind of overshoot 229, 230 when the market is kind of in a good mood, or when there's news that people interpret as Fed interest rate related, which in theory will help IWM, at least that's the prevailing theory. I don't know, again, none of my business. And so, not investment advice, but selling premium above and below these levels has been a profitable strategy. And again, not investment advice. Long flies or broken wing butterflies into this zone up here. If one thinks that a breakout of 230 might be a way to go, a long 230, short something up here. You could do a 230, 240, 250 butterfly, or you could break the wings, or you could do a 132, or however you want to do it. If one is bullish, if one is bearish, do the same thing on the other side. Of course, you can just buy vanilla options. Call premium is relatively cheap. So another standard way to do it might be to buy a 25 delta call out in time. There's other ways to play it. But of course, that depends on your thesis. I really don't know. I'm just saying. TLT. A quick default way to look at interest rates. Oh, I didn't look at Tesla. How remiss of me. Tesla, there's this guy, Elon Musk, who's been making the headlines lately, and he owns this company called Tesla, that we had this crazy breakdown. I forgot what the news was, and I think might have been earnings, car delivery, I don't remember what it was, doesn't really matter. Now we're back over that 350 level, and it seems that Tesla, should the market cooperate, has legs back up to where the next big call levels are. Now let's get to TLT while we're in the T neighborhood. And I've mentioned a few times on this that TLT, that there were some large institutional players that came in with TLT, 88 calls, March 7th and March 14th, and there might have been some Feb 28th also. They looked like they were fly structures, and so far it looked like it was a good bet. You'd have to do flies, otherwise you kind of lose your decay. These would decay. Now let me switch gears. I always like to look at the semis, the SMH, which has been grinding higher. It's kind of at the top of its recent range. Now, while SMH does have some chunky volume in it, it's chunky OI, it's important to remember that this is controlled by the volume and the OI and the volatility of NVIDIA and the constituent components. And so this just tells us almost on a TA level where people see things going, and this rotates. And I'm thinking that this has kind of reached its destination, might grind a little higher with NVIDIA. If we have some exuberance, you have to look at the IV and look at the skew, see what the put call skew is, see where the call demand is. I would think NVIDIA into earnings, that's going to spill over into SMH. IGV, software ETF, software kind of had been doing well a while back when the narrative was hardware bad, software good, when DeepSeek came out. And now that kind of seems to be reversing in the Wall Street fashion show. And so it's kind of a lack of correlation, really. You know, it's whack-a-mole. And let me see if I have CORM over here somewhere. We're going to take a quick look at correlation, which I'm sure I haven't looked at, but I'm sure it's. Here's a 1 month correlation. So when correlation is high, everything tends to move together, i.e., when we sell off, they sell everything. When things go up, one goes up, one goes down. And if I guess for context, put it on a daily and use a line chart. And if we kind of look back in time, in July last year when we were peaking, going nuts, correlation was ridiculously low, 1 month or 3 month correlation. Then we had the August sell-off. Now we see these peaks and valleys in correlation. And so one can use correlation roughly as a way of saying, are we at an extreme? So the fact that we were at an all-time high wasn't enough to let us know that we're at an extreme. This is just another indicator that tells us that if we kind of zoom in a little more closely, we see, I don't have SPX price superimposed on this, but we can kind of see we have the late December sell-off, and we can see that all the various recent selling that we had these correlation breakdowns or correlation where everything moved together, and we have these correlation lows where one thing rotates against another. So it's kind of a way of looking at sector rotation. I'm not going to get any more in the weeds on this stuff. All right, so now I'm going to switch gears and let's, if I can find what I'm looking for, let me see, here we are. So let's take a peek at SPX. Oh, it's 8:31 already. I'm going to cut out soon. So here's today's expiration, and you can see the inflection point right in here. over here, that's where we get this kind of run up below here, and we see the kind of supportive levels in here. Let me see what this is here. So here's the March monthly. The March monthly is shaping up to be call dominated. And that's good, but remember this is gamma. As we go down, then the gamma of these deltas increase, and then we get a little more balanced. I don't like seeing profiles this unbalanced. And you can kind of see the indecision here. If you look at overall delta, there's kind of no big, what's the word I'm looking for? No big edge to the bulls or the bears other than 6,000. So sentiment is broadly spread out, and hedges are broadly spread out, left tail, right tail, near the money. And you can see that clear inflection right here, 6105, 6100. Kind of right where we are, which kind of corresponds to the levels. Magically, that corresponds. Don't you like it when stuff works out like this?
And Doc, maybe do you want to spend some time on Palantir and Baba? I think Baba had earnings this morning.
Okay, as a matter of fact, I ran Baba, so let's take a look.
And obviously Palantir, there's a question from Wolf. Lost 10% yesterday, so could be interesting.
Okay, so here we have a classic example. And this is, okay, and we see this very often. When a name like this exceeds its expected move, and these calls go ITM, market makers have to hedge to chase. This is, some of this buying might be whatever, short covering, whatever it is. A lot of this is market maker adjustment bars hedging their options positions that they had going into earnings. And so from here, what we typically see is this might continue higher, but we typically see it come back. Now we saw some, now I can give examples like that. I don't, we have some recent examples. I'll give you a tale of two examples. Salesforce, recently, when they had their earnings, they exceeded their expected move, market makers hedged and chased, and then after that expiration came, it started grinding down, and then we had news and other things intervened. Compare and contrast that with PLTR, Planeteer, which exceeded its move on earnings, and then option buyers kind of kept coming in, and it continued to run, and now we're coming into options expiration, and we're getting that reversion that typically we get, you know, like once that Friday is over, but we had a monthly options expiration here. This happened early February, so this kind of lasted longer. So my take on what's happening with Baba is we might continue to see a run short term with 150 kind of the next round number. I would have to look in the chain to see what's there, and then look for mean reversion to come back after this news cycle. Walmart, on the other hand, and then we'll look in the Walmart, on the other hand, had the exact opposite reaction. Looks like it exceeded the expected move to the downside, and so there's going to be hedging response. So they had to hedge these puts right down to this HVL level. No coincidence. We have put support 99, 100 round number. That's the level I'd watch for this stuff to clear out of the chain and for it to possibly continue its move higher. Now let's get back over here. Let me take a quick look at BABA. And as you can see, we have green. It looks like there's calls up here into March. And what I like to look at is just real simple. Look at where the inflection point is. Look at where the resting spot is. So we have a resting node at 42. We have another node here at 37. So these are kind of the stall zones. These are kind of the stall zones on the way up and the notches on the way down. Just look for the notches to help define the path broadly. Let's take a look at the DEX, at the options matrix. And this gives us an idea of targets. Targets 140, 150. We exceeded this target. Positive deltas all over. So, you know, this thing may pull back, whatever, but this is bullish until Trump and Xi get into a fight. I'm going to indulge myself for a minute. Look at CCJ. I've been a uranium bull for a while. Well, with Russia coming back online, with a possible peace deal or whatever, they had earnings today, gave a little bit of a bounce. CCJ is the apple of uranium, for lack of a better word. Canadian uranium producers, so of course, that brings the Canada-America Trump fight into the story, which kind of contributed to this whole big sell-off, and reaction is muted, so that's fine with me. Any other questions? Can you have a look at Planeteer? I would really like to hear your opinion. Okay. Okay. Did I answer your question about Planeteer? Let me take a closer look. Let's look over here at Planeteer. Okay, so you can see there's puts here. Planeteer. These puts are going to be controlling the action. We have inflection point right here at 117. I'm not sure where it is, but I think it's under that, buried in these puts. Let's look at March. Okay, March, we have this supported zone right near 105. We have a big playpen right here between 100, 105, and 120, recent high. Below this 100, 105, there's really not a lot to give us an indication of what's going to happen. April OPEX doesn't have enough gamma really. You know, here we have 1 million versus 500,000, so that's not going to really control it. We can look here at the options matrix and see, okay, we have the most DEX delta exposure right here for March, and we see the 120 level, 130, 80, 100. These are your main levels. I think the move is kind of done for now. I think we're going to be in a range. 80 would be a buy. If it gets to sell at 80, put and buy it, not invest it. Did that answer your question? Yeah, 60% earnings is government. And again, is Karp friends with Musk? Is that what they're going to be cutting? Are they going to be cutting the high-tech cybersecurity AI defense? Or are they going to be cutting the $600 hammers and the bloated salaries? I don't know, and neither do you. So I'm not going to try to read those tea leaves, and it's trading at a $3 trillion PE. I'm exaggerating. My point is, I leave that narrative for the algos and for whatever, and the options positions tell me what that narrative is, and that's what I try to trade. If I tried to base this on valuations, I'd be buying 6 PE stocks, which keep going down, to 10 PE stocks like Intel was, and be selling, Apple at 30 times earnings when it was, 175. So I used to be a PE guy. I was so much older and more serious then. I'm younger than that now, to quote Bob Dylan. Anyway, with that said, I think if there's not any more questions, I'm going to get off my soapbox and end it.
Awesome. Thank you, Doc. And as always, guys, if you want to learn more about what we do and what all the charts that Doc showed you, follow us at mentorkey.com. And next week, we're going to have a big product release, so stay tuned for that. Thank you, Doc, as always, and have a great day, guys.
Thanks. Trade safe out there, guys.